Hello, my name is Mike Swanson, and I run the website WallStreetWindow.com. And the odds are that you're watching this video because you got an email from me telling you that it's up. Because every single trading day, I send out an email before the opening bell. It's a free email list. If you're not on it, click below this video and you'll see a link to subscribe. Now, I'm doing this video on Sunday because I think this is an important weekend. And there's some things I want to talk about with you when it comes to gold, precious metals investing, and cryptocurrencies, how they trade differently, and what to think about them over the next couple months. Because I think we're very likely to see a bout of stock market volatility, perhaps starting in August, going into the fall at the very least, and how it may impact these two things, cryptocurrency, Bitcoin, and gold. But you got to figure out or think about what are the roles these things are playing in people's accounts, who own these two different things, to see how they may act differently from each other over the coming months. So let's talk about the crypto market first, and who's gotten into it in the past 6 months, really. Bitcoin was basically dead 2 years ago. And when the stock market crashed last year in March, April, it completely crashed, completely. And then when the market made a bottom, Bitcoin bounced up. But then starting around November, it accelerated and had a mega run that ended at 60,000. It went from like 10,000 to 60,000. And that run attracted many people into Bitcoin for the very first time. And in other cryptocurrencies, such as Dogecoin, they all peaked several months ago. Bitcoin's now hanging on 30,000. But let's take a look at some articles so we can understand what's going on. I got to share my screen so you can see exactly what it is I'm looking at. So this is an article by CoinDesk. It's a website that specializes in cryptocurrencies. You could say it promotes cryptocurrencies. And it makes note of this simple fact that Robinhood, one of the most popular trading and brokerage firms now in the United States, has got 18 million customers. Well, at the end of last year, 1.7 million of their customers had traded crypto. And by the end of the first quarter this year, as Bitcoin went to 60,000, that number shot up to 9.5 million. What this essentially means is that, let's say 10% of their customers was in crypto, but in 3 months, that number was over 50%. That's an indication of how many people in the United States flocked into these cryptocurrencies. They herd traded, essentially, is what happened. In fact, the business for crypto has attracted so many people into Robinhood to use them as their broker of choice or as a starter brokerage, that they had to triple the number of employees they have on their team to help people get into these cryptocurrencies. So, they now are sitting on $80 billion in assets. They're doing an IPO filing. And look, in March 2020, they only had 7.2 million customers. Now they've got 18 million customers. In other words, March 2020, another way to put it is by the end of the first 3 months of this year, they had more people buying crypto than they had customer accounts a year before that. That's a sign of the amount of people, the growth of the people that have gotten into crypto trading in the first couple months of this year, just as it peaked out, by the way. And the thing about markets and rallies is they are fueled by more money coming into something. But then once you get to a point where everyone is in it, there's no more money to get in it. And then, it's like a pyramid. It peaks out and then it starts to fall. And that's what's happened in the entire crypto market. And one reason Robinhood has attracted so many people into crypto is because if you've got a Robinhood account, I'm showing you mine, I've got bigger accounts, but I pretty much, one of the main reasons I have this Robinhood account is so that I can see what it's like to be a Robinhood customer and see what it is they're buying. And when you log in, the really only information you get to tell you what you might want to buy is these lists, these trending lists that you log in and see. And what these lists show is the second thing on the list, crypto. The third thing on the list, altcoins. Then you got Bitcoin family, Ethereum family. So almost a third of this list is crypto related. What this essentially means is that even if a Robinhood person or someone is, just thinking in general, I want to get into the markets, so I'm going to open up a Robinhood account, they're basically going to be encouraged by Robinhood to get into crypto. And Robinhood did that. They encouraged people to buy crypto on the way up. In fact, they did podcasts in their email list telling people, crypto, crypto, crypto. So they've helped create a herd of people. And, here's the thing. These are pretty much people speculating in the markets, doing risky trades, or having the mentality that if I buy crypto, I can get rich quick, or I can turn $100 into 10,000 or something. But that kind of mentality, when things go against the person, who enters the trade with thinking that, they end up being so-called weak hands that sell out because they don't really have a solid footing on why they are in these things. They haven't bought on the basis that, hey, this is like a stock that's paying me a dividend, or this is a stable thing like gold. When the stock market crashed last year in March and April, the S&P fell like 13%, 30%, over 30%, the S&P 500. But gold fell half that much. So gold is less volatile than the stock market is when the stock market has a big decline. Crypto is not. When the stock market declines, crypto collapses. Crypto is not a safe haven at all. It's a speculative instrument, and that's the role it serves in for someone who's buying it. It's an instrument of speculation, and there's nothing wrong with that when you time it right. But if you don't, then you get caught and you get smashed. When the stock market has pullbacks, crypto tends to completely collapse or fall much greater than the stock market. Hence this chart here of the price of Bitcoin. I have circled the times in which Bitcoin has made a significant peak or has had a dip. And you can see the second chart, the second thing below the crypto Bitcoin chart is QQQ. That's the NASDAQ 100. When it's pulled back 10% or more, crypto Bitcoin has crashed. And below that, I've got an indicator called, it's a correlation analysis comparing the price action of crypto to the NASDAQ 100. And what it's doing is showing us that crypto trades closely to the NASDAQ. It doesn't trade against it. It's not something that goes up when the NASDAQ goes down. When the NASDAQ goes up, crypto at times will go up more. It's like a call option on the NASDAQ. That's how crypto actually functions in the financial system. Does not function as a safe haven, does not function as an alternative to the dollar in the foreign currency markets, because when the dollar goes down in value, crypto doesn't go up. There's no relationship historically showing that. In fact, crypto can go down when the dollar goes down. What crypto does is trade with the NASDAQ. Goes up more when the NASDAQ goes up, goes down more when the NASDAQ falls. That's what crypto does. That's what Bitcoin does. The other crypto is even more volatile. So that's how crypto actually functions in the financial markets. All these people that tell you all these stories, it's a safe haven, it's going to replace the dollar, it's the future, it's a new technology. This is all hype. This is all stories being told to you and other people to entice you, to give you a storyline of, oh, this is some magical thing. It's not. It's just like every other thing that trades in the financial markets. It has a relationship one way or the other to the stock market, to the dollar, to the bond market. All these markets interact together in a global financial system. And Bitcoin is not unique to that at all. In fact, it's just not. So another way to think of this is what Mark Cuban said about Bitcoin way back in 2017. He laid out the reality of what Bitcoin actually is. And he said it's not a currency. Because look, no one uses Bitcoin as money in the real world. The town I live in, there's not a single store that will accept Bitcoin as payment. I run a business. I've run other businesses in the past, and I won't take it as payment because it's too volatile to act as a store of value. If you're a business person and you're putting money in a bank account, you don't need your assets to go up and down 10% a day. You can't run a business like that. But not only that, but Bitcoin charges these giant transaction fees when people try to use it as money. It's just not usable as money. What is it then? Well, Mark Cuban has said in 2017 that what Bitcoin really should be thought of as a collectible. In fact, I would say it's a virtual collectible coin. Back in the 1970s and 1980s, collectible coins were a big thing. Stamps were a big thing. When I was a kid, I collected baseball cards. When I was in my 20s, Beanie Babies were a rage for a couple years. People were selling Beanie Babies on eBay for $500. Various collectible markets can boom and crash. Right now, there's a boom. I think it's still going on, at least it was last year, in baseball cards. So what cryptos basically are virtual collectible coins. And that's a good way to think of them. As long as the virtual collectible coin market is booming and going up, then these things are great speculations. But when that market peaks, then that is no longer the case at all. So where are we now? Mark is right. It's a virtual collectible coin, but what's that mean about the future? Well, if we look at a Bitcoin chart, this circle right now is critical. Because what has essentially happened is we had this mega run from 10,000 up to 65,000. And Bitcoin spent February through May trading above 50,000 and 65. It was in a range of resistance and price support. It couldn't get through 65, but every time it went to 50, it held, because dip buyers came in at 50 until May, when those dip buyers ran out of money. Just the people out there that were willing to buy the dip, they were no longer, just those people weren't there. The numbers of those people, everyone that was going to buy the dip did it, and there was no one left. So that support level at 50 cracked, and then Bitcoin plunged to 30, and now we're doing the same thing again. But instead of trading between 50 and 65, we're trading between 30 and 40. Really, in the past few weeks, we've been trading above 30 and 35. So that 30 is just as key as 50 was between February and May. 30 is the new 50. So the question then becomes, will 30 hold? And then we can get a move above 40 to be a new rally. That's what everyone that was looking at the market, on charts like this is looking at. Now, if you load up Robinhood, they don't show you charts going back for years, like we just looked at, in which you could put indicators on or even draw on them. They just show you, they just default to daily price action. So that's what the people focus on. So they see a friend of theirs talk about Bitcoin and crypto, they load it up. And if it's up, they think, oh, I'm buying that. But they have no knowledge of, they're not seeing the overall trend of why 30 is so important. The implications of this are dire, or could be, because if the NASDAQ were to pull back, and it's already off its high a little bit, but a lot of the Robinhood stocks are way off their highs. And that's a sign of possible danger. But if the NASDAQ were to fall, let's say 10% from its high, Bitcoin's likely to go through 30 and enter a collapse. You know, it could fall to 15 or 10 even if the NASDAQ falls 15 or 20%. So the risks are high in the crypto market if there's an increase in stock market volatility. I think that's a big risk. In fact, I'm going to do a post tomorrow about some big warning signs in the markets. They don't signify an instant decline immediately, but they are warning signs that suggest that the overall risks are no longer to the upside when it comes to the NASDAQ. So I think, you know, we have had a tremendous rally since April in the markets. That rally spread into Bitcoin starting in November to bring that big speculative surge. But there's a high risk that stock market volatility will return to the market. Volatility when it comes to Bitcoin means collapses and crashes. And people then look for assets that are not as volatile to get into. That's one reason we're probably at the moment have been seeing a rally in treasury bonds. The TLT ETF has been going up over the past several weeks. Frankly, to my surprise, I wasn't expecting it to go up as much as it did, but it's done that. But gold is less volatile than Bitcoin. Now, there are times when gold has gone up when the stock market has gone down. It did that in the fall of 2018. There are also times, though, when gold has gone down when the stock market has dropped. But that's what happened, for instance, last March and April. But during those declines, gold has fallen less than the stock market. So gold is something that does act as a safety valve. It's less volatile than the stock market. And that's why I have a portion of my accounts invested in gold as a safe haven asset class. Bitcoin does not function as a safe haven asset class at all. Bitcoin is simply an instrument to leverage up on potential further gains in the NASDAQ. And I don't think it's time to be doing that. I think it's time to reduce risks in a portfolio. And that means it's time to, in my view, sell cryptocurrency assets as a way to raise cash and reduce risks in a portfolio. You know, if you want to reduce risks in a portfolio, in an account, you do it by selling the things that tend to go down more than the stock market does when it goes down. This doesn't mean you sell everything you own and go 100% to cash. I'm not saying the stock market's about to crash or anything like that, but we could easily get a 10, 15% pullback. We saw one happen in 2018, and you can see that's the first circle on the chart. You know, you look at that, the NASDAQ fell a little bit, but Bitcoin, you know, crashed. The NASDAQ fell over 10% and Bitcoin crashed on that decline. That's the first circle on the chart. So I don't think this is a time for risky assets. Crypto is the riskiest thing other than call options that someone can own. So my thinking, you do what you want, but I don't own Bitcoin. I don't own crypto. I feel good about owning it, not owning it. And if I did own it, I'd be selling right now. Now, if this is the first time you've seen me on YouTube, click the subscribe button and then click the bell next to it. That way you'll get a notification from YouTube the next time I put up a video. In fact, if you click the bell, they'll notify you immediately. So hit subscribe, click that bell, and hit the like button because it's fun to see that, know that you're out there with me in these markets, because we don't want to be trading these markets all by ourselves. So I'll be talking with you later.